It's time for the stock of the week. This week we got Cava, ticker symbol CAVA. Let's look at some graphs to get an idea of what's going on. Cava's revenue has experienced impressive growth year over year, showcasing the company's ability to scale and expand successfully. Revenue grew by over 90% from 2021 to 2024. On the net income side, we can see that Cava has also been able to successfully grow its net income, especially from 2023 to 2024. It went from having a negative net income to being largely profitable in its latest fiscal year. Here are two additional graphs. The first illustrates the company's consistent growth in free cash flow per share. This shows that the business is becoming more efficient at generating cash, which can be used for growth, paying down debt, or rewarding shareholders. The second graph highlights Cava's quarterly increase in the total number of restaurants. They currently have 367 locations open right now. This is probably the most impressive result I've been able to find. This shows that Cava has been able to consistently increase its same restaurant sales growth. It's one thing to open new locations and attract new customers, but this is showing us that the company is also able to increase its customer base in its already existing locations, which is amazing. Here are some key metrics for the company. Cava recently reported a gross profit margin of around 38% and net income margin of around 14%. To put into perspective, a company like Brinker International that owns Chili's and operates in the same industry has a gross profit margin of 16% and a net income margin of only 5%. Also, in Cava's case, I believe they will improve their margins even more because as they expand, they'll be able to take advantage of economies of scale and lower their costs, which should help increase their margins. Okay, now, everyone has been saying that Cava has the potential to be the next Chipotle. If we invested in Chipotle at its IPO, we would have grew our investment by over 5,000%. Over the past decade, Chipotle has become one of the most successful fast casual brands in the US. Like Chipotle, Cava focuses on a simple, customizable menu with fresh ingredients. Cava's Mediterranean theme aligns with growing consumer demand for healthier eating habits. Now the question is, can we expect over a 5,000% return that we got from Chipotle? Let's do a deep dive into Chipotle. We can see that along the years, the company has slowly increased the number of its restaurants every year. It now has over 3,500 restaurants worldwide. The stock price, unfortunately, did not follow the same trajectory. Therefore, if we were to buy Chipotle in the past, what was important was holding the stock through all the tough times that the market brought. This is the same idea we need to have when purchasing Cava. Don't try to time the market, because CEO Brett Schallman is doing a great job right now growing the company. Healthy Middle Eastern cuisine is the latest food trend. Cava's new Chicago location attracted a large crowd on its opening day, and the company is expanding its customer base and increasing its brand recognition. Just to give a bit of a background, this shows the number of stars on Google that both Cava and Chipotle received in their restaurants in Manhattan. I decided to use Manhattan in this example, but even if you look at other locations, you can see the trend is pretty much the same. Cava is rated overall as a better restaurant than Chipotle. And in this example, we can see that Cava has a minimum rating of at least 4.3, while Chipotle doesn't even have a rating greater than 4. Overall, Cava shows tremendous growth potential for the future, and I would rate it as a strong buy.